Welcome to David and David on Real Estate. Join us as we explore the ins and outs of the real estate market.
Good morning and welcome to the David and David on Real Estate podcast. And today we are on number, David, take it away.
75. That's a big number.
We keep saying that every couple episodes, but the number just keeps growing. So Thank you for tuning in and thank you for joining us. I really appreciate having you on the podcast. And today is one of those topics that's a little controversial because whenever this subject comes up, it usually signals a change in the market, right? And this is a big indicator, I think, when you take a look at power of sales. Today, we're talking about power of sales. And, you know, whenever you see power of sales, usually they happen because people are in financial trouble. People stop paying their mortgages. And no worries. And we're seeing a change in how the market is influenced and perceived on the person who has the actual debt and the loan. And it's never a fun topic to discuss, usually very costly, usually very, very stressful. But I think for our industry and our sales professionals, it's very important that they understand how to deal with these situations on both the seller and the buyer side.
Right. Yeah. And for those that aren't as familiar, power of sale is the common term. It's the process of a lender selling a property because the loan has gone bad. The borrower has defaulted, whether it's a homeowner, it could be a commercial property as well. But whoever owns the property has a loan, they've now defaulted. The lender's given them notice you're in default. They haven't rectified it. And they start a process whereby the lender can sell the property, take over the property, sell the property to recover their money and deal with it. So they're selling the property under what's called the power of sale, because there's a power right in their mortgage document that allows them to do this. And they have to follow the Mortgages Act and give proper notice. And once the notice period expires, they can go ahead and sell the property. So, you know, and David, you're bang on. Like, this is just what happens in an economy as the market slows down with interest rates rising, et cetera, people renewing. People can't afford sometimes the interest rates that they're renewing at. Some people in an economy like this, you know, losing jobs and don't have the same cash flow. So it's inevitable that there will be some defaults on these mortgages, and then they don't all go under power of sale. Sometimes people are able to refinance, or they'll sell the property themselves in order to avoid it. So they'll rather sell it and pay out their mortgage loan and buy something less expensive. But there's a whole number of them that won't go that route, and the lender will give them a little rope to do something, and then eventually they're out of rope, and the lender issues notice, and then they're going to sell the property instead of the owner selling the property. So that's what we really want to get into today.
Yeah, no, absolutely. And Dave, you used a term, you used the term default, right? And so I think the first thing we have to do is define that term, because sometimes default means a lot more than just stopping paying their payment on time. Sometimes default can come in different terms, right? It can look very different. So what other forms of default are there? As you know, because the one we talk about is, okay, you stop paying the mortgage. That's a example of default, but there's many other types of defaults as well.
Yeah, that's the main one that gives rise to, you know, to a lender taking action. But, you know, basically a mortgage says, you know, we'll give you a loan as long as you make your mortgage payments, keep the property insured, and don't commit waste on the property. Then, you know, you'll be in good standing. So those are a couple things. If a property goes uninsured, like an insurance policy lapse and the lender gets notice from the insurance company that the property is not insured, that's a default. And if they don't fix that really quickly, you know, that property will, you know, the lender's going to take action on that. And the other one is waste. If someone, you know, if you borrow money from a lender, let's say you've got $1 million home, so there's a land cost to it, and then there's a house on it. So the lender gave you money, maybe they lent you $700,000 to buy that $1 million home. If you decide, I'm going to demolish this home and then build something new, well, all of a sudden you've committed, like you've just took away the equity because you demolished it. So now if you go in default, then the lender is selling vacant land, right? So you can't do that. So the mortgage says, you can't do something like that without going to the lender first and making arrangements with them. So that's another way someone would be committing waste, basically, by doing serious damage to their property to erode the equity in the property.
And David, I guess people would come across this in the construction world all the time, right? Where, there was a permit and they're going through a construction project. They don't notify their mortgage or their lender. And all of a sudden, the lender finds out that this has happened, and they can issue notice that the mortgage is in default. So really important. And I think as realtors, it's important for us to know that, because we can, we come across these situations all the time where builders are building, where people are making major improvements to properties, and there's a demolition aspect to that. So I think it's really important that realtors understand, what default can mean. And listen, these documents are written as a demand note, right? Correct. Every mortgage is a demand loan. Yes. So, even my understanding is that if somebody's personal situation changes drastically, that puts the bank in a very risky situation, unpaid taxes, a huge change in financial situation. These are very rare, but they can also trigger default on their mortgages.
Yes, and I'll give you one other default that we run into a lot these days. Most residential mortgages these days from conventional lenders say, their first mortgage loans, and they say you cannot put any secondary financing on the property without the consent of the lender. So someone might be getting in a little bit of financial trouble, or they want to do a renovation, or they want to do an addition or something. And they might go say, okay, I'm going to get a second mortgage, maybe not from that lender, maybe from another lender, maybe from a private lender or a secondary mortgage market or something. But as soon as they do that, they're in default of their first mortgage. Okay, if they don't get the consent of that lender first to do it. And a lot of times lenders don't want to give the consent because that'll affect the cash flow, and they're concerned about their position. Even though they're in a first position, they don't want the loan to go in default without them knowing about it. So they don't want someone to put a second mortgage on. So if they find out that there's a second mortgage on the property, they're gonna, that could trigger a default too.
Yeah, I mean, that's important to know, because it can affect, what you do with the property later on, right? Like when you buy the property and you have a lender that has this policy, then that impacts your ability to take equity out of the property. And it impacts your ability to use that equity to, make other investments, or to renovate the property, or to have access to that money. So basically that lender is really safeguarding their position against anything happening in the future. But as a borrower, you have to be very aware and cognizant of that, because sometimes you need funds to, put into effect other action plans that you have, and to really live your life, and to do certain things. So that's a really important one, David, that people really need to understand and pay attention to. And a lot of the times they ignore it, because it's not explained properly to them.
Yeah.
Right. And they get themselves into trouble. But again, all of this becomes more scrutinized by the lender when we're in a down market, right? And that's really what we're going to be talking about today. Is we're going to be tying in power of sales, and tying in how the market is reacting to market conditions out there, and why we're seeing more of these power of sales, and why we have to be more educated on these.
Yeah. Well, we since this is our 75th episode, and it would have made the same comments if it was our 74th or 76th probably, but I want to just take a little pause in talking about power of sales for a second, just to tell you something. There was a documentary that aired on CBC on Sunday called The Harold Ballard Story. So for anybody out there that doesn't know, Harold Ballard was the owner of the Toronto Maple Leafs during the 70s and the 80s, and probably single-handedly destroyed the franchise more than anybody else and prevented the Leafs from succeeding. He was quite a character. Anybody that grew up in this city in the 60s, 70s, 80s, 90s, well, he died, I think, in 1990, certainly knew who Harold Ballard was. So CBC does a documentary. Jason Priestley, the actor, actually produced this documentary. It was on Sunday. You could, I tell anybody to look into it. It's really worth your time to see a little history of Toronto and the Toronto Maple Leafs. And it's available to stream it as well and everything. Anyways, the reason I'm telling this story, and I'm wearing a Toronto Maple Leaf shirt to boot, just for that, is most people in Toronto that grew up and Leafs fans, Leafs Nation, have a hate for Harold Ballard because of the way he was and the way he dealt with things. There was a lot about the man that people didn't like. He really was not good for the NHL or hockey. In today's world, he wouldn't get the time of day because he was a bit of he had a big mouth, said what he thought, and in today's world, he wouldn't survive quite the same way. Anyways, the reason I tell this story is, for those of you that remember Maple Leaf Gardens, Harold Ballard sat in what was called a bunker. It was down in the corner behind one of the nets. And during the games, he was always there, and he always wanted the camera to come on him, etc. And he had his sidekick, King Clancy, who was a Leaf legend, sitting beside him, and different people would come in and out of this little bunker, this little suite. So anyways, there's a picture that I'm going to show up. I'm going to share my screen that came up. So this is the bunker. That's Harold Ballard in the middle, King Clancy to his right, and the man in the front clapping with the wild hair is my dad, Jack Korman. So there was a couple shots, and I had a bunch of people send this to me over the last few days. They clipped it, it was a picture, they took a little video, and they sent it to me. So my dad had season's tickets sitting right there, right in front of Ballard's box for a number of years. And I think my dad was one of the only people that sort of had a fondness for Harold Ballard. Everybody else in the city hated him because he got to know him by sitting there. Like when Harold and King Clancy were getting a drink from the hot stove lounge, it was, "Hey, Jack, we're getting drinks. What do you want?" And they'd always bring him a drink and give him a program and include him in conversations. And I got to sit there a lot of times with them. And my mom, there was 3 seats there. But the other part of the story, I just tell, these seats weren't my dad's seats. He had taken over the season tickets from a cousin and had them for about 10 years. And my dad had seasons tickets elsewhere, and so he sold off those seasons. And then one year he went to pick up these seats and the tickets were gone, the season ticket. And they told him, "Box, no, some was already picked up." So he called his cousin. He said, "Oh, I sold them to someone else this year. He offered me some extra money." And so all of a sudden my dad had no tickets that year because he'd already committed his seats to somebody else. So partway through the season, my dad goes to his cardiologist, and who's in the waiting room but Harold Ballard, because it turns out they had the same doctor. And he says, "Jack, I haven't seen you at a game all year. Are you okay? And what's going on?" And they compare heart conditions and stuff like that. So my dad tells him the story, but he doesn't have the seats this year. He says, "Here's my private number. Call me after your appointment." My dad calls him, and Harold arranged to get my dad the two seats right beside those 3 seats that he used to have. He got that season's tickets transferred into my dad's name. I don't know what he did to the people that used to own those seats. I never heard that part. So somebody else will tell the same story. I think it was a terrible story. Harold Ballard kicked us out of our season tickets or something, right? But he got those seats into my dad's name. He says, "No, you got to come to the games and you got to be right near me at the box."
Oh,
so
that's
anyways,
such a great story. I love it. And, relationships are so important, David. Like everything we do in life, everything we do in business, we want to do business with people we like, right? And, your dad's there for the game, enjoying the game, but for Howard, this is his livelihood. This is
Harold,
Harold, sorry. This is his livelihood. This is his business, right? And, a completely different approach, but you want to be surrounded, even when you're in that environment, but people that you like, but people that you have a relationship with, that, people that you're looking forward to seeing each and every single night when the game is on, right? The last thing you want is to be surrounded by people that, are not important to you, right, in that situation. And like, they spent a lot of time together. So great story. Do you mind me asking what happened to those tickets today?
Well, we still have the tickets in the family. And actually, there was two pair of tickets, and the game you went to last week was one of the pair, which is the one that he always had in his name. And there's another pair of tickets, but now we're in a different building, and there's it's not it doesn't have that type of access to anybody. They're just tickets in the middle of the place, and it was it was my dad and my mom's still around, so they're really my mom's tickets right now, and it gets spread out through the family. And my dad had made commitments back then about selling off tickets to other people, and he maintained that, and then I sort of took over helping to handle it, and we still maintain it, the same people just getting tickets all the time, because that's the way it was, and that's the way he wanted it to go forward. So we get a few games to go, and it's always fun. But every time I go to a game, for anybody that's seen me at a game, I'm wearing my dad's Toronto Maple Leaf jacket and his Toronto Maple Leaf hat every time I go to a Leaf game. And I get stopped and asked about it all the time. Like, great hat, great jacket. And I go, oh yeah, let me tell you the story about how, whose jacket it is, and whose hat. So anyways, I love it. So it always brings back. So anyway, this documentary brought back memories, and a lot of people reached out, said, hey, I saw your dad on, on television. And whenever I see an old game, from the 70s and the 80s, I'm always want to, if something's being televised, I always want to look to see, because inevitably there's a shot of Harold Ballard in the bunker. And if there's a shot there, sometimes you see my mom, my dad, I've been in some, my wife Marla's been in some, in different things. There's a little shot of my brother Mitch that was in this one, in this documentary. You see the top of his head, so if you know what you're looking for. So anyway, it's always fun to see. But it was fun when I went to games like that. Like, I was hardly paying attention to the game, because I was just like listening back behind to see what the conversation was behind us. So it was always fun.
It's like a piece of history, right? The Maple Leaves are so ingrained in our culture, right?
Yeah.
A grassroots perspective, and it's great to see that. And hearing the story come from you, David, puts so much meat on the bone, right? Because like, you start understanding the culture, right? To somebody that hasn't grown up with hockey, right? Because I haven't grown up with hockey,
Right.
Hockey is not, part of my culture. But to hear how excited you are, to hear how, engaged and how into it you are, it's wonderful to see. And I think, we talk about this a lot, but hobbies are so important for everybody. Everybody needs to have that higher calling and needs to have something to look forward to. So, you even wearing your dad's hat and your dad's jacket to every game, like, it's just, it's sending goosebumps, as you told the story. So thanks for sharing. And it's such a big part of our city and why everybody loves Toronto.
Yeah, it is. It's a part of our history. It's a big part of our culture. And I talk to a lot of, of clients that have come here, immigrated to Canada at some point, like we all have, like our families all have at some point, right? Some more recent, some, it's second, third generation, fourth generation here already. But, so many people that, that come from countries that have, the hockey's like, they don't even know what it is. But once they're here, they sort of figure it out, because they see it's so important to so many people. It's such a part of the culture with the youth, getting involved in it. And, the kids coming home and, they grew up in a culture that maybe soccer was a sport, but their kids are coming, my friends are all want to play hockey, or they want to play road hockey. I need a hockey stick, or I want to learn to skate. They're all going skating, or they're all going to play hockey. And they learn the culture, and they learn, like, this is an important part of Canadian culture. And, so it's, it affects everybody as, as you, the longer you're here, at some point you're going to be affected by hockey. It's just part of our Canadian culture. It's not by no means the only sport, but it's certainly ingrained in our heritage.
Yeah, no, I completely agree. And we need that. And I think our youth needs that as well. I mean, I think hobbies are really important. So
yeah. All right, I'm going to tell one more story. I know we'll get back to Power of Sales. So, and this sort of, the facts are subject to the podcast, because we've spent a few podcasts where we talk about mentors.
Yes.
People that influenced our lives. And, we've talked about various people and people that have coached you, professionally and in sports and other things, and different people that affect our lives in certain ways. And it's amazing sometimes we don't even realize who was a mentor or how important someone may have been in our lives, even when they're there for a short period of time. So I had that experience, this week, because I got a notice from Osgoode Hall Law School, my law school, that the associate dean, longtime associate dean, a man named R.J. Gray, passed away. And so R.J. Gray was a legend at Osgoode Hall. He went there as a student, and it was the associate dean there like forever, as far as I knew. And he was there when I was there in the early 80s in law school. But not only was the associate dean, and I never had him as a professor, I never had him, but he was the Osgoode Hall basketball coach, the team coach. He started coaching the team in 1959, and he coached it till I think the year 2000 when he retired. So like 41 years he was the coach. So I was there for 3 years, made the team, played on his team for 3 years, and it was really good basketball. And we traveled around, played all the other law schools, played other tournaments against different cities all over Ontario. And he was just a great guy, great mentor, guidance counselor in so many ways. People loved him when they had him as a prof. I never had that, but I had him as a coach, as a basketball coach for 3 years, but I got to do road trips, got to know him that way. But I only had him in my life for 3 years. Okay. I think I went to one reunion, maybe 5-10 years after I left law school. Anyways, I finished law school in 1983, about 2 decades later. Maybe it may have been 2004, 2005. I'm with a group of 12 guys at Big Wind Island Golf Course up in Lake of Bays near Huntsville, Ontario, to play golf. And on the driving range, pouring rain, and we're getting ready to play. And some guy in a yellow raincoat and a hat comes up the path, and he's yelling, "Where's D. Korman? Where's D. Korman? I want to see D. Korman." Anyways, I'm over here, and it was, sure enough, R.J. Gray. He's now retired from the law school. He's got a cottage somewhere in the neighborhood. He's working at the course as a marshal, as a golf marshal. He sees my name, and I didn't make the arrangement, but he sees my name on the starters list, D. Korman. So he's running around looking to find me, to see if it's the D. Korman that he knows, right? So he comes over, and he was great. And I hadn't seen him, 15, 20 years. I don't know how long it was. And you think about it, like, this man, he coached from 1959 to 2000. That's, 41 years, 12 players on a team every year. And he was a prof with, he was 300 students at Osgoode every year, all those years. He's met and knows a lot of people, right?
For sure.
And he really only knew me for those 3 years and hadn't seen me, but he came to find me, and I introduced him to all the guys. And he just hung out with our group like all day, just kept coming by. I wasn't marshaling everybody else on the course, that they just kept coming, telling stories, a few lies about me and a few tales that he remembered. And just a great guy. And every time I hit a bad shot, there off he went to go find my ball. He was just terrific. And anyways, he lived a pretty good life, touched a lot of people. And if I have a story like this, and he felt like, I can only imagine what other people, how important he would have been, because he's that type of man who's a leader and a coach who would make an impact. But not only did we know him, or all thought we knew him really well, but he found time to get to know each one of us. And I was nothing special, I don't think, for those 3 years. I wasn't the best player on the team or the star or anything like. I was just, one of the guys. I was a starter. I played my share. He counted on me. But my time having a drink with him, at a hotel, was just as important as what happened.
Court.
So, anyways, R.J. Gray, great man, great mentor, influencer, which I didn't even realize so much until all of a sudden, he's gone.
Yeah.
And I wish I would have reached out more.
Well, David, again, one of those touching stories, but I think the story here is that we can all be that mentor to somebody. right? And we just don't know, like the simplest thing, like just being courteous to a Tim Hortons drive-through employee and just engaging them and saying, hey, thanks for the coffee. How are you doing? How's your day today? Are you having a good day?
Yeah.
Those little things can make such a big difference in that person's day and how they feel about themselves and in their lives. You never know what they're going through. And
Right.
I think everybody could be a mentor to somebody else. It doesn't have to, it's a great story, but it doesn't have to be that grand. It could be much, much smaller, much simpler. And, we should all make an effort to do something nice and to touch somebody's lives and go out of our way to be nice to people, because, ultimately, we're all in this together and we all have to support each other. Right. And I mean, that's why we're doing these podcasts. I mean, that's we hope that we touch your lives, and we hope that we're making a difference in your career.
Right. And we never know how we're influencing people and how we're going to touch their lives. And that's sort of what I was thinking of, exactly what you're saying, like, David, like, like, will people come up to me at some point in time and have that type of experience? Would someone see that I'm at, that to seek me out on the other side of that and say, oh yeah, David really, I only knew David for a couple of years. I worked as a law clerk in his office, or I was an associate lawyer for a couple of years, and then I moved on for whatever reason, because we can't all stay together forever. Like, things happen. But do they think well of you? Do they think good of you? Do they think you help them, even if it didn't work out professionally or something? An agent that worked with you in your brokerage for a couple of years that may leave at some point in time for whatever reason. And it may have been a good decision, it might be a bad decision in hindsight, but for whatever reason. But if they run into you 10 years later, or they see you, they say, oh yeah, David Gorski really helped me out. Those couple of years that I was with him, like, he really taught me a lot. I mean, maybe in hindsight I shouldn't have left or should have made other choices, but he was really, a good mentor to me. And that's what we should strive to be. And I, this is just sort of a reminder, like, we can all do more and we can all do better. Because you never know how much of an impact you have on somebody's life, and it's really easy to have a negative impact. But let's work to have a positive impact, even if those relationships don't continue the way you'd like them to do, or your best intentions might be. But you just never know. So it's just a reminder that we can all do better.
Yeah, no, I completely agree. David, I don't know if you remember. Do you remember Cody Shawan, who was a motivational speaker? He came to one of our kickoff meetings. He's the guy who took off his suit in front of everybody and talked about being vulnerable and taking off your suit of armor and still being able to perform, right? I don't know if you know his story, but he used to be a director of a funeral home. So he wrote a book, very interesting perspective, but he would notice all these people coming into the funeral home and grieving their loved ones. And the one commonality that he saw is like, what got him thinking is like, how do you want to be remembered when you pass away? Right. And he wrote a really, really awesome book about that whole experience and what he learned through that process and what he saw and what he observed. And, the people that, had these big funerals and had all these people versus, people that, maybe didn't have such an elaborate funeral and didn't have that big support. And he kind of talked about the difference. Right. And it's a very interesting perspective, but got me thinking about him and about the book that he wrote and about those challenges. And I agree, David, I have a story to share too, but we're running so low on time. But I wish I could share this story with everybody.
All right,
we'll leave it for
76.
We'll leave it for the next podcast. But let's get back into power of sales.
Okay.
Let's keep adding value. But thanks for sharing those stories. I mean, they're so important.
Okay, so what do you want to know about a power of sale?
Listen, let me ask you this question, because I mean, and this is really talking about the marketplace. I hope our professionals know the difference here, but everybody thinks that when you buy a power of sale, you're going to get a good deal.
Right.
Right. Let's talk about that, because there's a lot to unpack there.
Yeah. And that's exactly what agents sometimes think. And that's what their buyer clients think. Oh, I'm buying a power of sale. It's a lender who's desperate to sell the property. I'm going to get a good deal on this. And it's a different negotiation. There's different clauses that go in the agreement of purchase and sale. but you don't necessarily get a bargain. Okay. Sometimes you do. You might get a bargain just on the price. You might get a bit of a reduced price, but a lot of times you don't, because first thing you have to understand, when a lender sells a property under power of sale, they have a duty to try and get to get a fair market price for it. Okay. They can't just sell it to somebody they know, oh, this is power of sale, we have a $700,000 mortgage on it, probably with $1 million. But if you give me $750,000, I'm okay because I'll get all my money back. Like, they can't do that. They have to go through a process to sell it properly and try and get fair market value. So it has to be listed, it has to be exposed in a multiple listing thing to show that it was exposed to the market. And you have to keep records of, of people that, the showings and offers that came in, because you can't just take the first offer and the lender can't say, all I care about is getting enough to get my mortgage money back and my costs, and my interest and penalties and stuff like that, and my legal fees. That's not good enough. Like, you have to try and get fair market value. So if it is exposed to the market like it's supposed to be, it depends on the market that it's in at that time. So if it's today, they might get a fair market value price for it. There's some buyers out there, but they would get a completely different price today than if they sold this a year ago, and in a different market when there was multi offers coming in. Because I know we acted on quite a few a year ago in a multi-offer market that we were in. The power of sale properties were getting bid up just like all the other properties were, and people were overpaying for value. Okay. Now, sometimes there's a slower market than today. Maybe the property is worth $1 million at some point in time. Maybe you get it for 900,000 or at some lesser price because there are less people out there. But it's not necessarily a bargain. Okay. But I'll argue that even if the price is a bargain, even if it's a reduced price, there's other factors that come into play that make it not as much of a bargain as you might think it was going to be.
Right. And we'll get into that in a second. But the courts have consistently ruled that the lender has to have the borrower's best interest at hand to get the highest possible price. They have to have it documented. This has been legally challenged time and time again. And look, the exposure is always on the lender side because the lender has resources. They have money. A lot of the times you're dealing with big institutions and they have deep pockets, right? So right. When this goes to court and they get challenged on this, it costs hundreds of thousands of dollars in legal fees to go through those court processes. So a lot of the times the institutions have learned over time that, you know what, we can't take the first offer that comes in. We can't sell it in the first 5 days. We have to have proper documentations. We have to have proper documents showing that the property was listed adequately, it was priced correctly. We need to have 3 different market evaluations from 3 different realtors, from 3 different brokerages. Like, banks will cover their themselves and will ensure that they do whatever they can to be able to prove and substantiate the price they ultimately agree. And listen, it goes through a process. It's not one person making the decision. There's a process internally of how these get reviewed. There's a process internally of how they need to be responded to. And there's a big misconception that you're going to get a deal out there. Now let's talk about the crowd mentality, right? When a buyer commits emotionally to putting in an offer, and say they put in a low offer initially on a power of sale, there's going to be other buyers that come that have the same sort of mentality, thinking that, hey, we're all going to get a deal here. We're all going to get a deal. Let's put in an offer. And before everybody knows it, those buyers are now emotionally invested in the property. They're bidding each other up. They're letting their egos take over. And now that power of sale was priced slightly below market value. Now it's sold above market value. And we see this over and over and over again. And it's hard to explain to people that you won't get a bargain on power of sale. And even if you do get a bargain, which is highly unlikely, there's so many things you have to worry about on the technical side and the fine print that it might not be as good of a bargain that you think it is. And David, take it away, because I know that you want to jump in here and talk about all these small minutia things that you have to really need for.
Yeah, there's 2 points that I want to expand on a little bit, because you're right, but you got to remember, when a lender is selling the property with power of sale, they have to account for anybody else that might have an interest in the property. So after they sell it, they have to show what they sold it for, what they paid, because they're trying to recover their mortgage principal, any outstanding interest. There might be penalties. There'll be legal fees for dealing with it. They're going to have to pay commission. If there's outstanding property taxes or other utilities, that gets paid out. But a lot of times it's not just the homeowner that had an interest and you have to account to them. There could be other people too, like the spouse of the owner would have had an interest in the property, got to account to that person. But there's also, when there's other mortgages on the property, you have to account back to them too, because when you're selling the property, the first mortgage lender selling the property, they sell the property, they cut out the second mortgage lender, gets cut out. The mortgage gets discharged. The second mortgage on title gets discharged from the property when the first mortgage lender sells the property under power of sale. Now, if they had money left over after the first mortgage got paid everything, and there was money left over for the second mortgage, they have to give that money to the second mortgage lender, but it may not cover that lender for their full debt. If there's any money left over after the second mortgage is paid off and there's still money available from the proceeds, that goes back to the owner. So they have to account to anybody that's behind them in interest. So they really have to go through this process and be careful and document, like you said, and make sure they're doing it, that they're doing the whole thing correctly. But generally, a property, on the second point, generally a property would get marketed for a little less than fair market value. And that's why people think there'll be a bargain on the price. And the reason is the lender is selling the property on an as is, where is basis without any representations or warranties, because the lender doesn't know what the property is really like. They haven't lived in the property. It's different than when an owner is selling their own property and everything. So the lender says, we're selling this property, take a look. You're buying whatever you see. Here's the price. You're going to pay us this price. We're not giving you a representation, a warranty, nothing. You're buying it as it is. So there might be all kinds of deficiencies in there that the lender doesn't even know about, that a homeowner would know about and would be responsible for certain defects, latent defects, patent defects, things like that they might know about, could be responsible. But a lender is selling it saying, I don't know if there are any defects. I don't know if there's any warts or blemishes. I don't know what there is. I'm selling you whatever my interest is, that's what I'm selling. So take it as it is. You can't come back to me after closing if it turns out there's mold or there's leaks or there's this or there's that or the roof needs repair. And seller, you should have known that there was all these things, because here's a seller. No, seller didn't have that, didn't know. So that's why it's priced usually a little bit below market. You're buying it as is, where is, with all its warts. And the lender's telling you nothing. The lender's saying, I don't even know if I have the right to sell you the appliances that are in the property. I don't know if those appliances are owned by the owner or if they finance them. But whatever my interest as a lender, I'm going to give to you. If someone comes to collect those appliances because there was a financing contract on them, then like, too bad, so sad, because the lender doesn't even know and isn't going to take the time to find out. So there's a real difference from that point of view. So sometimes you might buy it at a price below market value, and then a buyer goes in and they say, oh, we got a leak in the roof, we got a leak in the foundation, we got a plumbing problem, we got a heating problem, like who knows what they find. And it turns out they're spending money on the property. And when you finish spending that money, you end up buying the property at a fair market price, not at a bargain, right?
So David, when you buy a power of sale, what debt gets discharged and what kind of do you have to assume and what kind of remains and comes with the property?
Yeah, well, a buyer's not really assuming any of those debts. So what happens is when the lender goes to, there's a default, they give notice to the homeowner, but at that time, as lawyers, we do a search of title, we see what else is on title, and we give notice to anybody that has an interest behind our mortgage on the property as well. If there's a second mortgage, if there's a construction lien claim, if there's a CRA, something that was registered, or there's outstanding property tax, you give notice to anybody that you find on title that, hey, the property's in default, we're issuing everybody notice. Because once you give notice to those people, they all have an opportunity to redeem and put the mortgage in good standing if they want. So just the easy example just to explain that, obviously the homeowner gets notice. So before the lender sells the property, they can always show up and say, hey, I refinanced the property, or I'm selling the property myself. So before you sell it, here's your money back. So that's easy for a homeowner. But what about
I just want to jump in there for a second, and that can happen up until like 24 hours before closing.
Yes, and that's a great point.
Really important to know, because there's big risk on the buyer side. Like, let's say a buyer buys a power of sale, they sell their house, they make all the arrangement, moving company comes, and the original owner of the property puts the mortgage into good standing. Now, the probability of that is highly unlikely, but I've actually seen that happen.
Yes. Yeah. Right? And that's a great point. It's so important. And that happens. And that's another reason why, in theory, you're getting the property maybe on a bargain price, because even though you've got a firm contract to buy it, right, there'll be in that contract with the lender that's agreeing to sell your power of sale, there's special clauses in there that deal with the power of sale. And one of them makes it really clear that, hey, buyer, you should be aware that the owner could redeem right up until closing. They could bring the mortgage back in good standing. If they do, then the transaction doesn't go through. Okay. And you're right, David, like they could have made all their plans and their moving arrangements and everything else. So when you're acting as an agent and, taking a buyer around, they got to be clear that that's a risk and there's a possibility. And you got to try and go the extra mile and find out what's the likelihood. Like, has the owner just thrown up their hands and say, fine, I accept that you're going to sell it? Or can you find out, is the owner trying to actively refinance still? Is there any chance they're going to be able to do it? Are they trying to sell the property themselves first? So you got to look into all those factors too.
And they're important factors, right? Because at the end of the day, there's two parties, or there's multiple parties, that is going to be affected by that decision. So I think that's a great point, David. I think doing that due diligence and finding out if there's a chance or what the likelihood is of curing that default is really important. And I think people, and realtors especially, need to understand that cure can happen. My understanding is right up until the point that the new title is registered. Is that right, David?
Yeah, it can go right up. If they show up with a check and put the mortgage in good standing, they'll kill the deal. Okay, so there's always that risk. Now, it doesn't happen that often, but it does happen.
Yeah, I've seen it. One of my really good friends and mentors is actually a second mortgage lender, and it's amazing how often it happens. It happens more often than people realize, right? And then it is a risk. Right.
Yeah.
And again, the market that we're in also dictates the likelihood of that risk happening, because if we're an upward moving market, right, the chances of somebody, lending or giving that owner the possibility of refinancing are way higher than in a downward moving market. In a downward moving market, the chances of that cure happening are a lot lower.
Yeah. And that's a great segue, talking about, second mortgages, because I want to make a point too. Like let's look at this from a second mortgage lender's point of view. Okay. So if you had a second mortgage on the property, obviously you're a little more exposed to the equity eroding under you than a first mortgage lender is. And that's why usually second mortgage loans come with high fees and a much higher interest rate than a first mortgage loan. There's a lot more risk. So let's say there's a property, it's got a first mortgage, it's got a second mortgage. So if the first mortgage goes into default, okay, that automatically would become a default under the second mortgage, usually if it was drafted properly, because it would say right in the mortgage, if the prior mortgage goes into default, that's a default under our loan as well. But in addition to that, first mortgage lender would issue notice to everybody that has an interest. So the second mortgage lender would get notice that the first mortgage is in default. So now, if the first mortgage lender is going to sell the property, let's say it's $1 million property, there was a $700,000 first mortgage, and maybe there's a $100,000 second mortgage on the property. Okay. And that was a couple years ago. So now they go to sell it. Maybe it's worth $900,000 right now, but it's $700,000 plus the interest, plus penalties, plus legal fees. Maybe there's outstanding property taxes, utilities, commissions have to be paid. You start doing the math, the second mortgage lender might not get their $100,000 back out of the property at the end of the day, plus their interest and penalties, etc. So the second mortgagee, once they get notice of the first mortgage, one of the things that they could do is say, I don't want the first mortgage lender to sell this property and I lose control, because they're going to sell it and I may not get any money or may not get a lot of money. So one option they have is they can put the first mortgage in good standing. They can make the outstanding payments of interest and penalties on the first mortgage. They don't have to pay the first mortgage off, but they can keep it in good standing just by making the interest and penalties that were outstanding. And now the first mortgage is in good standing, but the second mortgage is in default, because under the terms of the second mortgage, if they have to take those steps and pay the first mortgage, they can add those amounts that they paid to the first mortgage lender to their second mortgage, and it all can be collected by them under their second mortgage. So now they're in default. So the second mortgage said, I'm going to sell the property under power of sale. I'm going to issue because my mortgage is default. So I'll give notice to everybody behind me. I don't give notice to the first mortgage lender, because when I sell the property, the first mortgage lender gets paid of the proceeds anyways. That has to get paid first. So they're going to get their money. And now they're in good standing anyway. So it's the principal they're going to get back. But the second mortgage lender now has control of the process to sell the property, to market the property and do what they want. And power of sale isn't their only option. They could also foreclose. A lender could foreclose and say, I want to take ownership of the property. It's a different process where they could foreclose on the property to take ownership as opposed to sell the property to a third party. So it gives a second mortgage lender some options about how they want to deal with it and try and get control of it. Now, some second mortgage lenders have deep pockets and they got ability to pay that cash flow and protect themselves that way. Some don't have that ability, and then they're at the risk of the process that the first mortgage lender goes through, and they may or may not get their money back.
David, yeah, you're absolutely right. And I mean, I think that the moral of the story here is that if you are giving second mortgages, I think the best case scenario is to be in a position where you can always pay out the first mortgage, or at very least make the minimum required payments to keep that mortgage in good standing. And if you can't, then I probably wouldn't be putting the second mortgage on, right? Because what happens in these situations is that the fee schedule is so substantive that if the first mortgage goes into default, by the time they issue their notices, by the time they write all these letters, that it erodes the equity for the second mortgagee, right? So the chances are that the first person is going to get a majority of their loan back because there's equity there. But again, that equity is eroding because they're adding on all their fees to the principal amount, right? And those fees are substantial. So if the second mortgage doesn't take control of the process, by default, their equity is eroding behind the first mortgage, and they're in a much less likelihood to recoup their money. So if you're a second mortgagee, it's so important to have the cash flow and to have the financial power to be able to pay out that first mortgage and be in control of that situation, because it protects your position in that process.
Yeah. And there's other issues with selling a property on power of sale too, because you need access to the property. You need physical access to show the property to people, right? So usually there's somebody living there. It might be the homeowner, and it might be tenants that are in the property. So part of the process, in addition to issuing the notice of sale that you're going to sell the property, the lender has to go to court to get an order giving them possession of the property, so they can change the locks, control it, and get by court order, have access to the physical property so they can stage the property or do showings of the property, etc. Because people need access. People want to go in and do inspections or do whatever they're going to do, or at least visit it. But if you got a tenant living in there, you need a court order to allow you to get in there. So there's another process. So they go to court to get that order, and the cost of getting that gets added to the mortgage debt as well. Okay, because it's really hard to sell a property without being able to getting people in and out, and that's a problem. So sometimes they have to go through a process to actually evict the people that are there, whether it's the actual owner of the property or it's a tenant, in order to to get them out. So sometimes you can get them out. Sometimes you get a court order that forces them to allow these showings and allow the traffic to go through and everything. So, and that's another reason why sometimes these properties sell for a little less than on the price than they otherwise would, because sometimes you're selling it as an agent and you don't have access to the property to stage the property and to fix up and do all the repairs and the little touch-ups that you would normally want to do before you go to market, right? So you're showing the property sometimes at its worst.
Mm-hmm.
And if there's tenants in there, you've got other issues to deal with. So there's a lot of factors that go into selling these properties under power of sale.
David, what does a selling agent, how do they have to approach this from a logistical point of view when listing a power of sale? What are some of the questions they should be asking the lender? How involved should they be with the solicitor on coming up with the Schedule A and B and C to the agreement of purchase and sale? Let's talk a little bit about that process.
Yeah, well, great questions. Like, one of the things that they really got to look at is like who's actually living there, just for the reasons I went through, because possession is really important. Do we need to take an action for possession, or do we have a borrower that's fully cooperating? Because sometimes you might get that, and they may have made a commitment that they're going to fully cooperate and allow showings. Maybe they're going to allow staging because it's to their advantage too. If the property is going to be sold, they would want it to sell for as much as it. So you got to help convince them. It's going to be sold one way or the other now. It's either you, Mr. Owner, you're going to sell it, or we're selling it under power of sale. But if we're selling under power of sale, it's good for you to cooperate too, because it's inevitable it's going to get sold. We want to maximize the price by showing the property at its best. And maybe we do invest some money to do some little repair work. Maybe the owner has no money to do that, but maybe they'll cooperate, let the lender even do that to fix up certain things and spend it. That all gets added to their mortgage debt, but they may need the cooperation of the owner to get in and do that. But you can show them, if we do that, it should be a win-win, even though the amount paid for those repairs is going to jump ahead of their equity. If they get any equity out of the property, this might increase their chances of getting a better price and getting more equity out of the property. So you got to look at that. If it's a tenant situation, you got to look at that. But then in terms of drafting the actual agreement of purchase and sale, there's a whole bunch of differences. There's changes that have to be made to the standard form, the standard AREA form on the printed thing. But most importantly, there's a whole schedule of fairly standardized power of sale clauses that have to go in. Okay, then any lender is going to want that in, and you got to make sure there's a lawyer involved and making sure you're getting the right clauses in there. But the clauses, the gist of them basically say is to make it clear that the property is being sold under power of sale, that the seller has the right to sell it because the mortgage is in default, because the seller is not the homeowner, the seller is the lender. It's TD Bank, it's RBC, it's private mortgage lender, whoever it is, it's the lender is the seller selling under power of sale. So the rest of the schedule is saying that, the lender is selling this property as is, where is, no representations and warranties, to have those clauses in there to make that really clear. And that, but also have these clauses in that explains that the owner and other people that have an interest may have this right to redeem the mortgage right up to the time of closing. This transaction can be terminated because there's this right to redeem.
Right.
Okay? So that redemption is really important to be in there as well. So these are generally, in any lawyers that deal with power of sale have these standard clauses that should go in. So as a realtor, you got to make sure you get the schedule of all those clauses right in there.
And understand it and attach it to the listing.
Yeah. And you make it clear in the listing that it's being sold at power of sale too, because you don't want to receive offers from people that don't have that schedule attached, or that they're asking for certain reps and warranties from the seller, about the condition of the chattels and the appliances and the fixtures. Like, the seller doesn't know the conditions, so don't bother putting in that everything's in good working order, because that's not going to be accepted. So if you're an agent, like, don't even go there. You're never going to get that, right? Because normally in a standard offer, you're going to put that in, that the seller represents all the chattels and fixtures are in good working order and will be in good working order on closing. This seller is saying, I don't know. I have no idea. I've never used the stove or the microwave. I've never been in the house. So they're not going to give you that. So don't waste your time putting that into an offer. And the schedule of clauses will make it clear that there is no representation warranty about anything beyond chattels and fixtures, about the furnace, the roof, the anything, right? You're buying it as is where is. So if you get a chance to inspect the property or get an inspector, and a lot of times, you won't get a condition on inspection. Sometimes you got to do a pre-inspection and just put in a clean offer. Whatever that inspection report shows, the buyer's got to understand that's what they're buying. If the inspector said there's potential problems here and there, and there's leaks and this and that, you can't go back to the seller and say, hey, we did an inspection and here's 10 things that are wrong, fix it up before closing. The lender's going to say, no, you want it at this price, waive your condition. If not, don't waive your condition. We'll sell to somebody else, but we're not fixing anything.
Yeah. And I think it's really important, David, you touched on this too. When there is a tenancy for a power of sale, the power of sale process has nothing to do with the tenant or, with gaining actual vacant possession of the property on closing, because the Residential Tenancies Act, it has really nothing to do with the power of sale process. So if you do buy a power of sale and there is a tenant, there's a slew of other things that you're going to be dealing with.
Right. And if the seller has not gone to get rid of that tenant through whatever process, or the tenant agrees to leave or whatever, and the tenant has a right to stay, then they're selling that property subject to that tenancy. And you just take over, you have an obligation to buy that property and assume that tenancy. So you certainly want to know that if you're a buyer. Okay. Now, if you do, buy a property and there's a tenant there and you want it for your own purposes, there's a process you could go through to give notice to that tenant to get them out because the owner needs it for their own purpose. And you go through that process through Residential Tenancy Act. But your seller in this case is giving you zero cooperation or assistance prior to closing to do any of that.
Right. Makes sense.
So you're doing that on your own. You're assuming the tenant, and then after closing, that's up to you as the buyer to take whatever steps and give notice and let that notice period run. And tenant might not want to leave, and maybe you got to go in front of the landlord tenant tribunal or whatever, but you're getting no help from the seller or cooperation from the seller, because your seller's not the owner. The seller is the bank, and the bank doesn't care. The bank just wants their money back. You buy this property with all the warts that it might have, including the tenant.
Right. So I know that a buyer must assume all the work orders and deficiency notice and the zoning infractions when buying a power sale, but how would title insurance work when dealing with a power sale? Would title insurance protect the buyer in that case? So like the seller
Yes.
wouldn't be on the hook for any of those, but then title insurance would kick in and actually protect the buyer in those cases?
Yeah, it really works good in terms of title insurance, because like in a non-title insurance world, we'd be writing to find out if there's outstanding work orders. Right. And if we find that there's a work order, let's say, we'd write to the seller's lawyer, like the seller being the owner of the property, and say, hey, we found a work order, get rid of this before closing, right? And they got to fix it up. But with title insurance, we don't even check to see if there's outstanding work orders. Instead, title insurance issues a policy to the buyer. And part of the policy is, if it turns out after closing that we find out that there was a work order that we didn't know about at the time of closing, you've got coverage for it. So if that surfaces after closing, we didn't know about it before closing, then we give it to the title insurance company. They look after it. They got to deal with the city. They got to pay to fix it. That's part of the coverage that you get with title insurance. So title insurance really helps out here.
So that wouldn't be an exclusion because it's a power of sale in the title insurance policy.
No, it's only excluded, things get excluded from title insurance if there was knowledge, if there was prior knowledge, like we knew that there was a work order on the property and didn't disclose that to the title insurance company, they're not going to cover you for it. So that's why we don't even bother doing the search. We don't want to know. We don't want to find out, because if we do find out in the normal course, the normal owner is selling the property, we find out, then we go to that owner and say, you got to get rid of this. But if we find out when it's being sold at power of sale, we go to the lender to get rid of it. They go, no, we're not getting rid of it. You're going to buy the property subject to that order, or don't buy the property. Right. So we don't want to make those inquiries, and we want to get title insurance covered just in case there's a work order outstanding.
So I guess that would be exactly the same case with post-closing adjustments for taxes or utilities, where the seller is not on the hook in the power of sale case,
Right.
but title insurance would step in and protect the buyer if during the discharge process there were some adjustments that were missed for taxes or utilities.
Right. Yeah. You can't go back to the seller, the lender selling a power of sale after the fact, but there might be title insurance coverage for things like property taxes. There generally is coverage for that. So, but usually a lender selling under power of sale will check out the property taxes to see what's outstanding, because that really jumps ahead of their interest. So usually the taxes would get paid out, property taxes with penalties, because usually they would make that, the lender would be making that inquiry, not the buyer.
Right.
So because the buyer can be covered by title insurance, but usually the lender is looking into that and they're saying, hey, from the process of closing, we're paying the outstanding property taxes. Maybe there's a water bill that has to be paid, and we're paying our mortgage off and legal fees and blah, 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 real estate commissions. And then here's what's left afterwards. So a lot of times the buyer doesn't get the property subject to still property taxes being outstanding. But if something was missed, or if something wasn't paid in full, or there wasn't enough money to pay it all for whatever reason, the buyer would have some title insurance protection for that.
It's a good system. I mean, you can kind of see how the whole system is designed to function and kind of work as one to protect the lenders, to, have the defaulting borrowers, interests protected, and how the whole thing kind of works together. And then how title insurance comes in at the very end to kind of protect the new buyer against some of the things that the seller, can't warrant or can't assume or can't have any, can't give any warranties or representations on, because they've just never owned the property. So there's mechanisms in place to kind of protect each party. And I think it's a really good system of moving forward and having a final resolution at the end of the day.
Yeah, no, I agree. And like the buyer is fully protected in terms of buying a property that's not subject to any other encumbrances, because they all get wiped out by the power of sale process. Some get paid out.
Mortgages, construction lien,
Right.
this lien, that lien. There's not enough money to
Right.
pay everybody. Sorry, lender number 6, you're tough out of luck. And this new buyer gets this property with a clean slate, basically.
Yeah, it's free and clear from that point of view, because either people that hadn't got paid, or they got partially paid, or they got wiped out by the process. Okay. But the buyer gets it free and clear. They can put their new first mortgage on it, and that's a first mortgage. It's free and clear from that point of view. The buyer's risk is more to the physical property. Right. That's their bigger exposure. What are they buying if they didn't have an opportunity to do a full inspection, or things come up, or even if they did an inspection, but then they go in and it turns out there was a defect that no one saw, or something happened. They have no recourse to go back to the seller and say, hey, seller, who was a homeowner, said you should have known, or any reasonables would have known that there was this leak and there was an attempt to fix it and cover it up, or something. You don't have recourse like that back against your seller in this case, because your seller's the lender and not the homeowner. So whatever you discover after closing, whatever happens after closing, it's totally at the buyer's risk. Okay, so they get clear title. It's the physical property that's they're taking the biggest risk on.
And I think every single party involved in this process has a risk that they're kind of taking, and it's a very balanced system, right? Because the borrower, has the risk of losing money, can't give any warranties, never lived in the house. The purchaser knows what they're getting. What you see is what you get. Like every party kind of has a balance of the risk that they're assuming. And I think it's a really good system. But I think as realtors, we really need to understand the processes and the logistics and be that professional that pushes everything forward and drives us to a resolution.
Yeah. So, and all this, I hope doesn't discourage people from buying property under power of sale. And I hope it doesn't discourage agents from wanting to get involved buying a property under power of sale. Sometimes there might be a bargain. There might be an opportunity, but I should look at it like it's another property that's on the market. And in these days when there's so few properties on the market and something comes up, like don't dismiss it because it's more difficult or it's different to acquire a property under power of sale, like you should still consider it. It's another property and the supply is so short. So don't dismiss this out of hand. You just have to understand that it's different. And you have to go through different checklists. There's a bit of a different process, different drafting, different negotiations, different explanations to the buyer, but it still could be a great opportunity for a buyer, especially when there's a very low supply of things. So why not take a look at one of these problems? Maybe they can buy it a little bit under market value, but they might have to use a chunk of money to fix up the property. That might bring it right back to market value, but what's wrong with that, right? If they were going to spend $1 million and they end up spending 900,000 to acquire the property, but then they have to spend 100,000 to fix the property up, and they fix it up, that's their $1 million, and they got a home. So there's nothing wrong with this. I hope this doesn't discourage anybody. It just, they have to understand it's different, and there's different exposure, and they just have to act accordingly and get the proper guidance.
Yep. David, this is hot off the press. My phone keeps buzzing. I see that the Bank of Canada announced a 25 basis point increase in interest rates today, 8th consecutive increase in a row. I mean, that's one of the reasons why we're talking about power of sales days, because these mortgages, especially people that have variable mortgages, are becoming more and more expensive. And
Yes.
even though everybody was stress tested at a much higher rate than they initially bought, you know, given that this is the 8th increase, a lot of the stress tests that were done were at lower rates than where we are now. So, you know, you mentioned at the last podcast that you're seeing more power of sales and more properties are going through this process. And I think as interest rates keep rising, we're going to see more and more people get into these financial difficulties and these financial problems. So I think we as an industry need to, you know, really educate ourselves on these processes and become very familiar with them. You know, read the schedules, ask questions, understand what these logistical issues look at like, understand what the rights and limitations are, understand how title insurance works to protect the buyer in these cases. And really be that, you know, support system. We keep talking about that, but we really need to be that support system, right? So, you know, reach out to your database. If people are in trouble, the earlier you get involved as a professional in the process, the better. If people see that the writing on the wall is that in 2 months or 3 months or 4 months or 5 months, there's going to be a default, you better be booking an appointment, going and seeing that client and explaining their options. And the sooner they get the property on the market, and the sooner they're able to, you know, sell and relieve some of that financial burden, the better off everybody's going to be. Because once the bank gets involved, and once these fees get added to the mortgage, you know, that really erodes a lot of the equity very, very quickly. So as a professional, you know, and you know anybody that's in trouble, listen, the best thing you can do is go out there and be that support system and help them out of this difficult situation.
Yeah, that's fabulous advice. And it's, look, if someone's in that financial difficulty, you know, one of 3 things is going to happen. They're either going to have to refinance if they can, okay, and they may have to go to a secondary market to do it, or privately market. It's really expensive to do that. If they really want to try and hang on to their property, they might have to go that route, and it's really expensive financing, both interest rate, fees upfront, lender fees, very expensive, or the property is going to be sold. So one option, refinance, and then there's 2 options for the property to be sold, and it's going to be one of those 3. But of the 2, the property is going to be sold. It's going to be sold by the owner to get into something more affordable, so they could pay off their first mortgage, find another property living that's more affordable if they have to downsize or whatever they have to do, or move it to a, you know, move out of the city to a different market. So use an agent, help them do that. Or the lender's going to sell the property. And like you said, and we've been saying this, if the lender does it, that really erodes any equity that they had in the property really fast, and they lose control of the process. And they could be evicted from their own house before the house gets sold. You know, a court order could come through that's requiring them to leave, and they got to find other accommodations. So if, as an agent, if you can be on top of those situations and help guide them through that, and be proactive instead of reactive, like don't let them do nothing until all of a sudden the notice of sale has been issued by the lender, then you're really adding a lot of value to your client and helping them with their life. So and you never know the impact that you might have. Like you as an agent could be having an impact at this point in time in someone's life, like really important, because you came to them and helped them through this tough situation. And when they run into you 20 years from now on a golf course, they're going to remember you. Oh, that guy David Gorski, he helped me out in 20 years ago out of a real situation, and helped me get moved into a better place. And it really, it helped stabilize my life. So you never know how important these little things are and impact someone's life. So
it's interesting how we did a full circle, right? And we tied, the whole support and the whole mentoring, the whole helping and the whole lending hand. But, this is, again, no different than the story that you shared, and just having that human element, and that's the most powerful thing that there is.
Yeah.
Awesome. Well, listen, guys, thank you very much for joining us today. I know we went a little bit over the hour mark, but I blame that on David Korman's stories, which
my stories,
which were great. Thank you for sharing them, and join us next time for episode number 76.
75. Next one is 76.
Right. Join us next time.
Next one for 76, and you're gonna tell us some stories on that one. So
yes, I will. I'll share my story about my grandfather and the turnaround that he kind of made in his life, and how he was able to touch people, because it's really, really powerful as well.
Okay, looking forward to it. Thanks, David.
Awesome, guys. Thanks so much. Bye-bye.